Markets closed largely flat today, but before doing so, we did have some positive developments. We saw the Russell 2000 hit a multi-month high on an intraday basis. We saw the Nasdaq Composite hit an all-time high. We also saw the Dow Jones Industrial Average hit an all-time high, partially due to some positive response to Walgreens shares as rumors were floating that they were considering taking themselves private. We also saw that all four of our charts remain with a bullish posture. In fact, they all four ended the day with a bullish intermediate confirmation signal. So we're going to take a look at all of that, see how it affects our thoughts regarding the market going forward. We're then going to look at a trade application example from a key Dow Jones industrial stock that seems to be stuck in a bit of a holding pattern for an iron condor trade. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's November 5th, 2019. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel. While you're there, go to our description area and sign up for our email distribution list. In addition to that, we're heavy users of Twitter. My handle is @BrandonVanZee. I would encourage you to follow me there. And anytime you see David and I post tweets about the Market Outlook video, we'd appreciate it if you click like and retweet if you want to help support us. Lastly, we do have a group over there on Facebook. Feel free to join us at the web address embedded in the logo in front of you. All right, let's go ahead and dive into the charts. As you can see, I've got chart 4B pulled up here in front of us. This will give us a good view as far as what's been happening with the markets here recently. And as you can see, it's been largely bullish. Markets have continued to go higher and higher and higher. S&P 500, while it didn't quite hit an all-time high today, it did so yesterday. Dow Jones Industrial Average hit an all-time high today. Nasdaq Composite all-time high today, and Russell 2000 multi-month high, but it's still not higher than where it was trading back in earlier this summer. So be aware that the Russell 2000 continues to be the laggard from that perspective. But largely, this has been a robust market with lots of participation from a variety of different sectors out there. We kind of discussed that topic yesterday in my top-down trend trading class, that this is no longer just a market that's being driven higher by one or two sectors. This is a market that is seeing positive activity across a wide swath of sectors, and that kind of helps embolden those that want to take risk in this market environment. Also mention the fact that we, of course, are in a seasonally positive time of the year, as November, December, January are oftentimes some of the strongest months historically for the stock market. Of course, we go into those months with a fairly positive trend on our hands here. You can see that the background color of the charts is all that deeper shade of green, meaning that we do have a strongly bullish intermediate term posture at the current juncture. I also mentioned in the intro that we have bullish intermediate confirmation signals that are occurring here today on all four of our charts as well. We have the green line in the upper reversal zone on all four of our charts, and we have the red line in the lower reversal zone on all four of our charts. However, those of you that listened to my presentation on, I believe it was Thursday, will recall that I was discussing the bullish intermediate confirmation signal on our trade application that day on Citigroup, which ended up being a reasonably strong bounce thus far. But anyway, I was talking about the concept of better confirmation signals versus worse confirmation signals. And a couple of things that I mentioned was the blue line and how it was affecting that particular trade setup. I was mentioning that we would like to see the blue line between 50 and 20 at the time we're getting that bullish intermediate confirmation signal. And you can see if you look at the blue line right now on all four of our charts, we're nowhere near having that be the case. In fact, the blue line appears to be in the upper reversal zone in all of our charts except for the S&P 500 where it's just at 79, so just a hair outside of the upper reversal zone. So point is, from that perspective, we would not consider this to be ideal bullish intermediate confirmation signals. One other thing that I would point out that I mentioned on Thursday in regards to this conversation as well is that at least on the S&P 500, you'll notice that the momentum line is below 5. So of course that is in the lower reversal zone, but sometimes we've noticed that if it gets too extreme, meaning 5 or below on that reading, that the outcome is not nearly as good as when the momentum line is somewhere between 5, and 20. And so none of these signals that we see here would be considered ideal. We also have to recognize that we've been on a pretty good near-term run already, so it might be a bit much to ask the market to continue to deliver those type of gains to us here for the next couple of weeks. Eventually we'll have a little bit of a slowdown of sorts, and it could very well be happening here in the short term. You'll notice many of these candles kind of giving us a little bit of a topping feeling. We have a little bit of a indecisive candle right here on the Dow Jones as you kind of have that doji looking pattern. We have like a tombstone here on the Russell 2000. We actually had a red candle there that you might be able to consider a bearish engulfing candle, at least from the body's perspective, on the S&P 500. And you had basically equal highs and equal lows there on the NASDAQ. So that doesn't guarantee anything, but factually speaking, we've had a very nice run here recently. And we need a little bit of time to kind of digest those gains. I think right now the path of least resistance continues to be to the upside, and that is my expectation that we continue to hit new all-time highs going into the end of the year, but it doesn't mean it's going to happen in a straight line at the same time. Okay, so with that out of the way, let's go ahead and now take a look at our next chart setup. In this case, we're going to look at the 3 green arrows chart setup. This is chart 4D in this case, for those of you that are premium members of Market Scholars following along with your own charting package. All right, so as we're looking at this, you can see that we have 3 green arrows across the board. So 3 green arrows, for those of you unfamiliar with that term, is just simply looking at 3 different technical indicators. In this chart's case, we're looking at a 30-day moving average, we're looking at the MACD histogram, and we're looking at the stochastics. And you can see that we've got these arrows plotted on the chart to kind of describe what type of conditions we're in. 3 green arrows philosophy is one that is most useful for trend traders. It's not quite as useful for swing traders, but nonetheless, it is something that we take a look at in my Monday top-down trend trading class and use it as our buying signals in those classes. Now, of course, in that class, we use it on individual stocks that are outperforming momentum types of stocks in this market. In this particular case right now, we're looking at it across the market in general to kind of gauge what's the typical stock in the market likely looking like if we're judging it through the index itself. And right now, you can see that, of course, the S&P 500 and all the rest of its cohorts here look fairly strong from a trending perspective as we are hitting multi-month highs here within the last 48 hours, in addition to having green arrows across the board on all the indicators on all 4 of these charts. Moving along now to a longer term view, let's look at the 1040 crossover method. This is chart 4C for those of you following along at home. Now remember, this has been a little bit of a different story here where we've had bullish postures on the S&P 500, the Dow Jones Industrial Average, and the NASDAQ Composite for many, many months. You can see the background colors change when our posture changes from this particular chart's view. Again, this is a longer term chart view. All of these charts are 3 years in length. We're using weekly candles here, and we're using the 10-week moving average versus the 40-week moving average to try to determine our posture. And as you can see, we've got this color change from pink to green on these charts going back to February of this year on most of these charts except for the one in the lower right, and that is your Russell 2000 small cap index. Now, one of the more timely discussions that I brought up in our presentations last week, and although I didn't get a chance to listen to all of David's presentations, he was likely discussing it as well, is that on the Russell 2000 we did get a bullish crossover to occur officially as of last week. On this candle here, you can see that the orange line crossed up and through the blue line. You can see that fairly easily down below here through using that weekly and daily PPO as well, in case it's hard for you to see with the naked eye. But in this particular case, it's pretty obvious even with the naked eye that we had an official cross of those moving averages. Some of you might call that a golden cross. And while that is generally viewed as a positive sign for the market, as the more sensitive moving average is going up and through the less sensitive moving average, it's telling us something about the recent momentum of the market that in this case would be considered bullish. One thing we do have to kind of forewarn you of is that we've had these conditions twice in the last 6 months, and neither one of those really led to too much upside action, at least on the Russell 2000, right? We had a bullish crossover back here in April, and that fizzled. We had another bullish crossover right here at the beginning of July, and that fizzled. So there are no guarantees that this one will work out, any more than those other two failed. But nonetheless, it is generally viewed as a positive sign. You can see, for instance, back here, had you been lucky enough to buy the Russell 2000 when it had a positive crossover, back in 2016, you went on a tremendous run. So this is what you're hoping for on the left-hand side of the chart. On the right-hand side of the chart shows you the reality of the situation, which is none of us have a crystal ball. We've always got to be, willing to accept negative outcomes, no matter what the charts are telling you. But at least we can now say that we have a clean sweep across the board. We are no longer waiting upon the small cap index. It has now joined its large cap brothers and sisters with a bullish crossover on the 1040 crossover method. Let's go ahead and do a little bit of 12 grid analysis now, starting with chart 5A. You can see here that this is our intermarket analysis 12 grid, or asset class 12 grid, however you want to think about that. It gives us a broad view of what's happening kind of outside of the stock market. And you can see here that we've got a few areas of concern. One of them that is catching my eye is the breakdown in real estate. Notice that off and to the right-hand side here. Real estate has really started struggling. In fact, for the last 4 days, we've had downward sloping candles there, and now we have a downward sloping moving average. So you don't see that all that often, but that was an aggressive enough move where it actually changed the slope of the moving average. That was a pretty ugly day there on real estate, down 1.7% here today. And there has been a fairly seismic shift underneath the surface. I kind of talked about this. I don't remember if it was at the end of August or at the beginning of September, but there was that big shift from a factor perspective that really shook things up within the market at that time, where value started to outperform and momentum started to underperform. I'm starting to get the sense that that's taking place again. In fact, I could probably bring up one of the charts I use. In this case, let's look at chart 3C here, and this is our factor comparison chart. And I wanted to point out that value is just crushing it right now. And who is taking it across the chin as a result of that is down below here. It's low volatility, which you can see in the pink line there, and then that green line that you see behind it is kind of being blocked from a label perspective there, but that's actually the momentum. Remember, you can read the labels up at the top as well that are color-coded. So right now, we are seeing a major meltdown in the once red-hot, low volatility and momentum sectors, and who is now taking the baton? It's value. It's value in a big, big way. In fact, I was just doing some things for my strategy lab class here just before I started recording this presentation, and I noticed this is one of the things I share with my swing trading class on Wednesday, so I'll have this in the conversation regarding this tomorrow in class as well. But you can see here from a 1 month perspective, it's a clean sweep to the value funds right now. They're just crushing it. I mean, it's not even close. Anywhere between 8 and 10% returns on just a monthly basis with your typical value stocks out there. And remember, that is not normal, or at least it hasn't been normal. This has been a market in recent years that has left value in the dust. We are now seeing a seismic shift in the market back towards value. And what that means is there may very well be opportunities as a result of that. I kind of talked about Walgreens in the intro, and how it had some discussion about possibly taking itself private. You can see Walgreens closed up 2.6% today, but this is that gray line on that chart right there. Walgreens is a stock we've been talking about in my classes recently as being, a stock that is cheap on an earnings basis here right now, and it has been for much of the summer, and finally it's crawling out of its hole after kind of being in the penalty box for a long time. So that kind of, describes the typical pathway of a lot of value stocks. We also talked about that in my dividend growth investing class today, where a lot of the stocks that we had concentrated on in that particular class were considered value stocks as well as dividend growth stocks. And that particular portfolio is really starting to take off in a performance basis here in the last 2 or 3 weeks. And that's as a result of what we're seeing here from a factor perspective, value really starting to take off there. So, make sure you're aware of some of these changes that are taking place. And of course, if you are a premium member of Market Scholars, make sure you're putting charts 3C and 3D on your radar, because it's not just a sector game that we're talking about here. We're also talking about factors, and real estate and utilities are part of that low volatility and also momentum factors from earlier in the year, and they've really been giving up the ghost here in the last few sessions. So just wanted you to be aware of that. Now back on track, chart 5A. Let's see if there were any other movements that were worthwhile pointing out. I was pointing out here that the dollar had a oversold cluster signal here recently. We did get a reversion to the mean move here yet again today, but this appears to be a place where I would consider putting on a bearish trade, if anything, because it is still below that moving average right there. And, it looks like we still have kind of that downward slant here, at least over the last month or so. But, be aware that that dollar, if it does strengthen, does have the capacity to limit the gains in gold. And you can see right here, gold was down today, partially as a result of the dollar doing well. Interestingly enough, oil has been perking up here recently, despite the dollar strength in the last couple of sessions. We've been seeing a lot of those oil stocks that had been left for dead starting to kind of emerge here recently as well. And I suppose that could kind of play into that value theme that I mentioned a moment ago as well. And then down below here, you will see what has caused some of the turbulence in the real estate investment trusts, which is the 10-year U.S. Treasury yield is starting to go up at a fairly healthy clip here. We ended the session at 1.86% on the 10-year yield, and that's the third straight up session for interest rates there. And of course, that means that bonds largely were lower here today. Let's go ahead and take a look at another 12 grid now. In this particular case, let's go ahead and view the U.S. sectors. And as you can see, real estate was clearly the one that struggled the most here today. On a day when the Dow Jones Industrial Average hit an all-time high, a reminder that there are 0 real estate stocks in the Dow Jones Industrial Average. Another reminder is that there are 0 utility stocks in the Dow Jones Industrial Average. Remember, the Dow Jones indices have their own separate utilities index, and real estate was really not a major player within the stock market over the years, so there just has not been an opportunity for real estate companies to be in the Dow Jones Industrial Average, at least at this point. So, where we have seen struggles in those particular interest rate sensitive groups, that has not negatively affected the Dow Jones Industrial Average. In fact, it might have very well boosted the Dow Jones, because they do have large financial companies like JP Morgan in there that will benefit when interest rates rise, or at least that's the philosophy. So for the most part, you can see that this is a risk-on market. The 3 pink charts at the bottom of the board, staples, utilities, real estate, are all your defensive areas of the market. The other stocks on the board are more cyclical. Now, healthcare is a bit of a mix, because you have some healthcare stocks that are considered defensive and some that are considered, like biotech, and be more growth-oriented. So that's a little bit of a mixed bag there. But most of these in the upper 2 rungs would be considered more cyclical areas of the market. And as you can see, things look quite rosy from that perspective, as all of them are green charts, meaning bullish intermediate postures according to the market forecast. And many of them are up there near their multi-month highs, including financials hitting a multi-month high here today. Technology hit a multi-month high yesterday. Industrials hit a multi-month high today. Materials also hit a multi-month high here today. So there are some positive sectors out there that are starting to gain strength. In fact, that was one of the conversations we were having in my top-down trend trading class on Monday as well, is that the financials and the industrials were gaining strength on my sector selector rankings, where we saw the utilities falling out of favor. And so, if you expect the stock market to stay strong going into the end of the year, then you should probably expect that those types of sectors, these cyclical ones that you see in front of you, would be the ones that would lead the way under those types of circumstances. So for the most part, this is a pretty positive market. We don't mind it when the defensive areas take a back seat to the more cyclical areas in terms of performance. It tells us something about the strength and the risk-taking ability of this market right now. Let's go ahead and take a look now at our next chart setup. In this case, let's go over here to chart 5E. This is our global stocks primary group here. So some of the biggest economies on the planet here represented by these charts in front of you. And as you can see, it's a clean sweep for the bulls. In other words, we have green charts across the board. There are no pink charts here. And so that is telling us that according to the market forecast intermediate term line, which remember is the green line on the market forecast, we have bullish, not only bullish, but strongly bullish postures across the board on all of these charts. And that has been a theme that you've been hearing David and I talk about for the last month or so, which is we have started to see strength, greater strength from foreign markets than we've seen from U.S. markets. So don't forget, there's a big world out there. We've kind of been, secluded here in the United States in recent years, where we've seen a lot of strength here, but we haven't necessarily seen that globally. Now we're starting to see a little bit of a shift where perhaps there's some interesting opportunities outside of the United States that you could be looking for. Remember, a lot of those securities would also kind of play into that theme of value stocks as well, starting to, tick up here a little bit more recently. Now, as you can see, it's hard to pick what the strongest charts are because most of these look phenomenal. But Japan, you can see its intermediate line is at 98. Remember, it only goes to 100, so that's about as good as you can get right there. We also see a 97 here out of Italy. We also see a 95 out of South Korea. Those are some of the charts that look the strongest from my vantage point right there. A few of the other charts are also decent from where their readings are, but a little bit of a rollover taking place there in Germany today. You can see it was down 0.4%, and then France also kind of rolled over a little bit here today. So maybe just trying to catch its breath for a day or two, but for the most part, the trends are intact. And the trends are bullish right now for foreign markets, in addition to most cyclical sectors in the United States. Let's also take a look at the secondary global stocks. This will be chart 4, or actually 5G in this particular case. And you'll see right here that it is bullish across the board here as well. However, there is one caveat that I'll point out, which is Saudi Arabia and Argentina both have that lighter colored shade of green, not the darker shade of green. So while it's nice to see them tick a little bit higher here today, you can see Saudi Arabia was up 1.4% and Argentina was up 0.32%. You can see that their charts don't look all that appetizing, and so we're not quite to the point of being able to claim a strongly bullish posture out of those areas quite yet. And considering how ugly those downtrends were in the past, it might very well take some time to reverse those downtrends. But a lot of the other charts are looking quite a bit more healthy. You can see that Sweden, while it was down today, is in a strong uptrend. Taiwan has been one of those countries I've been talking about relentlessly for the last several weeks. It continues to work. It hit yet another high here today, up 0.63%, and now a tremendous amount away from that 30-day moving average in that case. Switzerland had been a very strong market as well, but we actually had a fairly sizable pullback today. So it did seem like maybe the European countries had a bit of a pullback today, whereas we continue to see strength in some of those Asian economies like Japan and Taiwan. All right, let's go ahead and quickly take it over to the internet for just a brief moment, and let me say my thanks to those of you that clicked like the last time I did the video. We got to 88, which is a little bit disappointing. As you guys know, I try to get up and over 100 if we can help it. Remember that the more you guys support us through your likes on Twitter, the more likely it is that we are going to go out of our way to produce the video. Yesterday might have been a good case in point on that front. Some of you are aware that David fell a little bit sick yesterday, so we'll wish him the best, and hopefully he's on the road to recovery. But, every time that we have a situation like that, we have to ask ourselves, do we want to push forward and, do these videos? And, of course, the more heavily they are supported, the more we'll kind of feel somewhat pressured or obligated to do the videos, whether it's good for our health or not. So in the case of yesterday, David was considerably sick, so I'm glad that he didn't do the video. But it is a reminder. We look at these numbers every single day. If we're up and over 100 likes on Twitter, then we will do our best to continue to bring these videos to you on a daily basis. If we are regularly below 100 likes on Twitter, then you can imagine that we can find other things to do with our time as opposed to taking the 2 or 3 hours out of our day to, produce, edit, send out notifications, do our research on our trades and all that kind of stuff. So if you are somebody that gets value out of these daily videos, do us a favor. Go over to Twitter, pause it right now, click like. It'll be pinned to the top of my timeline. Make sure you're liking David's as well. We really appreciate it. It helps us get the word out about our fledgling business to a much wider audience than we'd be able to do on our own. So thank you very much for those of you that do that on a regular basis. Also, tomorrow, David's going to be teaching his options inventory trading class at 11 a.m. Eastern Time. Then I'll be teaching my factor-based swing trading class at 2 p.m. Eastern Time, where we're going to talk about that transition of factors that I mentioned here earlier, where value continues to be, the apple of this market's eyes right now, and we're going to look for swing trading opportunities within that particular area. All right, let's get back on over here to the Thinkorswim charts and talk about our trade application example for the day. So I wanted to bring up, let's just go ahead and pull up chart 4A in this particular case. And I want to bring up the chart of Boeing, ticker symbol BA. Very well-known company, a stock that we've talked about a number of times in my classes. And as you can see here, a stock that is kind of meandering. It's in a holding pattern. You could say it's kind of just sitting on the tarmac waiting to take off. Now, it's actually done pretty well here the last couple of sessions. We had a bearish posture here momentarily at the beginning of November, and then we kind of burst onto the scene here a little bit in the last couple of sessions to kick us back into a bullish posture at this time. But there are mixed signals out there, right? Yes, it's true we have a bullish posture according to the background color of that chart, but it's also true that the moving average color is red. In other words, the path of least resistance appears to be down. So, you have one thing going for the bulls, you have another thing going for the bears, and then if you're just kind of take a step back and look at this 3-month chart here, I think most of us would agree that this is a stock that is basically smack dab dead in the middle of its 3-month range here. So when you have a stock that looks like that, and if you expect that those ranges will hold for the foreseeable future, one way to kind of approach a chart that looks like this is through the use of an iron condor. Now, an iron condor is a trade that involves 4 different strikes, and so it does have to be done more times than not on a highly liquid security like a Boeing. So remember, you might have great looking chart setups in other cases. However, they're going to be small or mid-cap companies that don't have a whole lot of liquidity on their options. The good news is Boeing, of course, has been in the news for all the wrong reasons for the last couple of years. And it does make it an acceptable trading toy for a lot of folks, because a lot of people like to bet on both the bullish and the bearish side of the argument, and that provides liquidity to the general situation here, which does help us if we're trying to get acceptable fill prices on 4 different strikes, like what would be involved with an iron condor. So I do have that trade pulled up over here on my trade tab already. And you can see the strikes that I've selected. First of all, I'm dealing with the December monthly contracts. All else being equal, the monthly contracts are typically more liquid than the weekly contracts. You can see that the on the call side of the equation, I'm selling, so that -1 right there means that I'm selling the 395 call, and I'm buying, so +1, buying the $400 call. Now, in addition to doing that, what would be known as a bear call spread right there, we add in selling a bull put spread. That's what the combination of those two things is what makes the iron condor. So on the put side of the equation, I'm selling, again, -1, the 325 strike put, and I'm buying, the +1 right there, buying the 320 put. So you can see that when I put all of those different strikes together in one trade like this iron condor, it produces a credit. we receive money up front for taking on this trade. Now, what we're hoping to accomplish is to apply this trade to a stock that will ultimately go largely sideways and stay kind of range bound into the future. So if that does not happen, then you have to be willing to suffer the consequences. If there's a big breakout on Boeing to the upside or to the downside, then that will harm a iron condor trade like this where you're selling it at least. You can see here that the credit I'm receiving is $1.19. Remember, you can click confirm and send, and it will tell you right here what your max profit is versus what your max loss is, which allows you to calculate your return on risk. So I'm going to get my calculator out here, and if I take $119 max profit, divide it by 381 max loss, that tells me that I have a 31% return on risk. Remember, we generally strive for over 30% on credit spreads. Now, obviously, if you want to get a bigger reward, you would have to tighten up your sold strikes. If you want a smaller reward but higher probabilities, you could also continue to loosen up your strikes if you felt like, they weren't in quite the right range. But right here, you will see that the break-even prices that we're dealing with here are $323.81 and $396.19 right there. So if we were to go back to the chart and kind of plot that out, let me get a drawn item here, and we'll just use a regular price level. And let me draw the first line up here, right click, edit those properties, and go to 396 point, I think it was 19. And so that's our upper band there that we want the stock to stay below. And then if we were to draw another line kind of down below here, and then right click, edit the properties, and go to $320 and actually it was 323, wasn't it? 323.81, I believe, somewhere right in that general vicinity. You'll see where that range is that I'm talking about. So we don't want Boeing to go up above this upper dotted blue line, and we don't want it to go down below this lower dotted blue line. So if you have a feeling that they're going to come out with some really terrible additional news compared to what has already been distributed to the public, then perhaps you want to kind of loosen up your bands on the lower end of the side. But what I would say about that is Boeing has issued some pretty terrible news already, and the stock really hasn't cratered as a result. Yes, it's true that it hasn't kept up with the rest of the market, but we haven't seen a stock that is in pure crisis mode where it just falls day after day after day. And so I think that's a sign of strength regarding its business. Obviously a lot of people know they're in hot water regarding, the manufacturing process of their planes and what they knew and when and this, that, the other thing. But it is still a business that is largely needed globally, as there are two major players, Boeing and Airbus globally, that need to supply airplanes to all of these airline companies throughout the globe. Now, there's, of course, smaller players out there as well, but the point is, Boeing is not the type of company that can just disappear tomorrow and the world will be okay with it. In a way, we need this company to continue to go forward and, of course, do things hopefully better going forward as well. But I have been kind of, somewhat emboldened to see that the company's stock price has not gotten blitzed to the downside despite having some really awful news affecting it along the way. So anyway, an iron condor may very well be a way to try to take advantage of other people's fears out there despite seeing a relatively calm chart of a stock that is just merely going sideways. So let's go ahead, place that trade, and we'll see if we can get filled on it first thing in the morning. All right, well, thank you for joining me here yet again. As far as I know, David should be back with you tomorrow, assuming that he's feeling a little bit better than he was yesterday. But I do appreciate you checking out the video here tonight. Again, if you got value out of it, be sure to click like for us over there on Twitter. But for right now, it is still all systems go. We do have bullish postures across the board. However, we would expect some sort of a shorter-term breather at some point. We did see some information regarding that in our candles today, so it's entirely possible it starts sooner rather than later. But for the most part, our postures remain bullish, and we expect all-time highs to be hit on a fairly regular basis throughout the end of 2019. So with that, I want to wish you all the best of success with your trades and your investments. Goodbye for now.